Welcome back. You're watching Stockwatch with me, Julieta Televi. Joining me this evening are David Shapiro from Sasfin Securities and Wayne McCurrie from F&B Wealth and Investments. If you'd like to send your questions, please email stockwatch@bdtv.co.za or SMS 41392. David, Wayne, good evening to you both. I thought I would start with the fact that it was actually an FT article written by Katie Martin today, and she talked about the strange Trump trade that is on. And she said, it's just a little lost and very messy. And if I understand it as follows, it is that Trump 2.0, and it looks quite likely that he will win the presidency, all things being equal at the moment, is inflationary, tariff protections, tax cuts, etc. So that's going to be inflationary, which would be bad for bond prices. I would have thought not necessarily great for the stock market because it means the Federal Reserve can't slash interest rates if there's more inflation in the US. But because there might be geopolitical risk, the game changes with him involved, there might be a safe haven flight to government bonds, which is good for bonds. So and good for gold, even though there's inflation. I'm really confused. Can someone clear it up? I mean, is that the substance of what the markets are grappling with at the moment?
To be honest, all of this is bluster. I don't think any of this eventually takes place. I think this is all pre-election talk, the threat of further tariffs on China. Who pays for tariffs? I never understand that, because if I want something from China, I've got to pay more. That's inflationary, unless I'm going to buy the American version, which I might not want. So I can never understand this. This whole basis of it's costing American jobs, and therefore we're going to find something in China. Find the manufacture. Suddenly we're going to find manufacturing capacity to build all these things. So I always find it just bluster and talk. The other side of it, which is the oil side, they want to push oil. Push fracking again, use gas, not renewables and that. So you've got all of these playing out in the market as well. All the renewable companies, all the utility businesses who use wind power and use solar power are all coming under pressure in that. So there's a lot of noise out there. If I see another Republican on my screen, I'm going to die. Anyway.
Well, you're going to see a lot of them, I suspect.
See over with, and let's just get back to the market.
Okay, Wayne, what do you think? Is that too messy? A series of thoughts to cohere into any kind of whole? Should investors really care?
Yeah, look, politicians will say anything. Whether that's actually enacted or not, you just don't know. I agree with David. I don't think it's going to be. I mean, if you impose 30% tariffs on Chinese imports, 60% tariffs on Chinese imports, I mean, that'll be hugely inflationary for America. It'll squeeze the American consumer. And the last thing any president wants is the consumer squeezed and interest rates possibly going up again, not down, going up.
Yes.
I mean, that will be extremely poor, bad for any politician. So this is just talk and bluster and also, I mean, can you even impose these tariffs? You've got the WTO, you've got a whole lot of constraints around individual power of presidents. And, Trump, if you look at Trump 1.0, was probably pro-business more than anything else. Cutting taxes, I mean, there is a fiscal cliff coming. I'm not saying it's this year or next year, but sometime in the next 10 or 15 years, there is a fiscal cliff coming for most first world countries. I mean, this is our next catastrophe, is actually a fiscal cliff.
Yeah.
And then to cut taxes, I don't know.
Okay, well, the one thing that we have seen in the last couple of days is gold doing its thing. And one of our regular viewers says, it looks like we're going to have a gold-dominated quarter. Does the panel agree? Wayne, I shall start with you, seeing as you maybe pay a bit more attention than David to the gold market.
Yeah, look. I mean, gold's run from 2,000 to 2,000, call it 2,500 almost this year. And this is on the back of Trump. It is on the back of the attempted assassination. It's in the back of political uncertainty, US election uncertainty, as you said earlier, on what seems to be now an inevitable outcome of Trump winning the election, because poor President Biden calls Vladimir Zelensky Putin, and, yeah, you just can't actually believe that these are the two best candidates that a country like America can come up with. But yeah, so gold is obviously running very, very strongly.
It has come off a bit, actually, in the last, this afternoon. I think it went to $2,474 maybe this morning. David, do you think, if you've missed the gold bus, which is frequently what happens, you blink and suddenly Harmony Gold is worth more than Sibanye, and it's had an unbelievable run. As David McCurrie from Mining MX said, it's hard to conceptualize that we were writing off Harmony as a company in terminal decline, and suddenly it's having an immense rally on the stock market. Is it too late? Do you think there's more to be had?
Yeah, you never get gold right. So if you want to start buying now, I think it's probably a year too late. You should have bought it at 2000 when nobody wanted it. You can't read gold the same as you can't read currencies. It throws you all over the place, and every time you try to read where the rand's going, you get it in the wrong direction. So those are very difficult markets. I watch the commodity markets every day. I mean, literally, because it's part of the makeup of markets. And you have no idea where it's going to finish, whether it's palladium, platinum, copper, gold, whatever it is. These are highly professional markets and our trading markets and that. So I've got no feel for gold, whether it's going to go up or not. Suddenly everyone's talking about silver. Silver? Buy silver? Serious? So I don't know. I prefer, the only thing we can really look at, Julieta, is businesses that produce something. You get a much better feel for how they're going than trying to guess what people are going to pay for an ounce of gold. I mean, it's a metal. It's a piece of stuff that you put out the ground.
Yeah,
I mean,
and there's a lot of it out of the ground. There's probably more out of it outside of the ground than there is inside the ground. I always ask,
what's going to happen at Fort Knox? What are they going to do with all of that gold? It just lies there with stamps on it, and people spend years and years guarding it. What are they eventually going to do with it? I don't know. And I can understand if it's wheat that's being stored there, you can eat it, but gold, I don't know.
Well, you're asking very complicated questions for our small minds to comprehend on the show.
I'm asking everybody, what's everybody going to do with Fort Knox? What do you do with that gold? No, those are our reserves. Okay. What are you going to do with them? I don't know.
This sounds like
gold.
Yeah, Wayne.
Gold as a percentage of world wealth is minuscule.
Yeah.
I mean, it's gone up hugely in the last year or so, but still, as a percentage of world wealth, it is truly minuscule.
Yeah, it goes back to the old days where people used to sew gold and diamonds into the hems of their coats and flee across borders as people were shooting at them. I don't know if that happens anymore. I
mean, gold has gone up, diamonds are just tanking.
Yeah.
Well, ask a Ukrainian. They're probably quite happy with a few gold coins. But all right, moving on. There's a question on Pick n Pay, which went X-right today. And the viewer says, any recommendations or suggestions from your panel on the way forward for Pick n Pay after today's, 16%? I think it was about 17% maybe at the close drop. Wayne, okay, so having had the rights issue, now what do we do?
Look, you've got your rights now. Okay, so if you don't want to exercise and put in another 50% more money into Pick n Pay, sell your rights. Don't just let them expire. So I know the share price, ignore today because this is more of a technical thing. You got to take today's share price and add back the price of your 51 null paid letters for every 100 shares that you actually own. So, ignore that for the minute, but there is a major uphill battle ahead for Sean Summers and his team here. I mean, this is the easy part, doing the rights issue and restructuring the balance sheet and closing the underperforming stores, etc., etc. The hard part is, how do you become competitive again? How do you take on ShopRite, essentially? I mean, that is a monumental task. You don't accomplish that quickly. So I mean, I know the actual, as I said, ignoring today's move, the share price is up 50%, since a couple of months ago. But I just think this is, I would sell my NPLs. If you still got Pick n Pay shares, I would sell my NPLs and the shares.
Okay.
They're running two businesses, Juliet. They're going to offload Boxer, or they're going to sell a certain percentage to the public. If you're a Pick n Pay shareholder, you don't get it. You still got Boxer in your Pick n Pay, but they're going to have an IPO, and they've got to hope that now running two businesses in parallel. Number one, they've got to get Pick n Pay to where it was, which Wayne says, they caught the big snaky. They're right at the bottom. They've got to claw their way up those ladders again, and it's going to take a long time and a lot of effort. And they've got to get customer support again. They've lost customer support, and they're closing store after store. There are huge disruptions happening there as well. So I'm with Wayne in that. It's not that I'm against Sean Summers, not at all, but he's got a lot of work to do to get Pick n Pay to, and I always say, why do you want to go for the loser? Go for the winner, which is ShopRite. If you really want to buy a grocer, what's wrong with ShopRite?
Yeah. Well, ShopRite's quite expensive. Actually, we had a question on Monday night, and someone said they were bowled over by the fact that the last time they looked at ShopRite and had considered buying it, it was 221 Rand a share. Now it's 296, and they wondered if they had missed the boat. And there was a divergence of opinion amongst the panelists on Monday night. So, but would you still buy them if you must have a retailer?
ShopRite.
Yeah.
They haven't let us down. They keep producing very good results, and they're doing well in a very tough economy. And you've got very good management who know what they're doing. They're modernizing the whole store. They're just knocking out the competition. So why do you want to go find a loser?
I mean, one of the issues, and I think, sorry, and I've just seen a question here saying, please unpack that long Pick n Pay sentence and what it meant. Well, either you have to trade on your nil paid letters. So as Wayne says, he would rather sell his Pick n Pay shares because you don't believe in the business case, or you have to take them up, right? And you have to exercise your rights. Okay.
If you decide to stay with Pick n Pay, you have got to take up your NPLs.
Yeah.
Or sell them and just keep your existing shares. But if you just let them lapse,
then you've lost
these
money.
shares are being issued at a big discount here, so you will suffer.
Yeah.
They're trading at around about 8 Rand a share. So for every 100, you would have got 51.11. I don't know what you're going to do with the 0.11, but I mean, which you have to take up. I think it's at 15.86, but they're trading at about 8 Rand now, which, if you're not going to take up, seems to be a very reasonable price, for the rights.
Okay, and if it's confusing, talk to your broker, I guess. Okay, but I mean, sorry, I just seen the question.
It's PRKN. If you're looking for it, the code is PRKN, which is the nil paid letters of allocation or rights.
Yeah. But the bigger existential question is whether you want to back Pick n Pay or you want to back some other horse in the retail race. Now, there are two questions on the NASDAQ and two, I suppose, slightly different angles, although maybe potentially the same. Please ask your panel if they think it's time to take profits out of the NASDAQ as it has run hard of late. And if so, where to put the money if I want to keep it offshore. And then the other viewer who asks about the NASDAQ says, how about going long the Dow, old school, and short the NASDAQ, tech AI hype? Okay, so, David.
That's quite interesting that. You know why? Because today, NASDAQ and the S&P came under a lot of pressure because of the threat to the semiconductor companies by the US government about restrictions on selling advanced technology to China. So I think everybody was looking for that excuse to sell out. So semiconductor companies came under pressure. I was looking at ASML because they've been some of the target of the US government, came out with very good numbers and future sales and got knocked. So you're getting this move out. And strangely enough, today I looked at the Dow and the Dow is up. I think of the 30 stocks, the last time I looked, I think 6 or 7 were down. 23 up, and of those down, they were all tech shares. So you are getting that switch. You're getting that happening now. So if you're a trader, it's the play at the moment.
Wayne, do you see that play persisting? So Okay, so that is the trade at the moment. Do you think it's going to last, firstly? And secondly, if you do think that the NASDAQ and the hype has run ahead of itself and you want to sell some of your NASDAQ shares, where would you put the money and keeping it offshore?
Well, look, I mean, as we've spoken about many, many times, conditions could not have been better for growth shares, or just call it tech shares, than they have been for the last 10 years. And with lower interest rates, et cetera, coming along, there should be a natural rotation into more consumers-led shares, maybe even financial shares, etc. So if you are fortunate enough to have been in the NASDAQ and made an absolute fortune, why not take some profits? No one ever jumped off a building by taking profits too soon. And to invest it, if you want to keep the money offshore, to invest it into more consumer staple type of businesses. Literally the grocery stores, the banks, the utilities possibly. So some sort of rotation would not be unusual now, to be honest.
Okay, so maybe old school is cool.
Old school might be good school.
Okay.
It's pretty boring stuff, but
not losing money while boring. It's much nicer than having an interesting life on a roller coaster.
Wait for the results, because it's that time of the year again. Everybody's gone away now. They don't want positions, and it's traditionally this is a time you get knocked. So but results will come out, and I think they're still going to be very impressive results. So, but if you want to take some profit, by all means, I don't think one should stand in your way and get too carried away with tech. We need a little bit of air out the bubble, as Wayne says.
Yeah.
But I mean, it's quite intriguing to look at the two different indices, and the Dow's, it's an average. You add up the share prices and divide by some factor called the Dow factor, which I don't know how they calculate, but whatever it is, that's how the average is calculated. So,
okay.
But I'm saying it's doing well. It's doing much better. There's another story as well. So if you think I'm grumpy today because the NASDAQ went down, the other one is on the weight loss drugs. Suddenly Roche came out with a drug, an oral one where the tests were good. So both Novo Nordisk and Eli Lilly came out. So not only am I losing on my tech shares, but on my farmers as well, on the fatty farmers, getting taken out. Not a good day.
Oh dear. That means it's not a good day for us both. Okay, well, you're talking about the old school, and US banks, actually, Wall Street banks have had a very good quarter. Coming back home, and the viewer says, First Rand, Standard Bank and Nedbank have all shown an upside since the 6th of June, but have now flatlined. Did I miss the bus here, or is there still an opportunity to buy? And if so, which one or ones does the panel prefer? Let's not forget Capitec. And I hadn't checked Capitec for a while, and someone pointed out to me today that actually over a year it's up, 40-50%?
Yes.
Which is a huge move. But Wayne, do you think you're too late for the banks?
No, you haven't missed the big banks running. So the First Rand, Standard Bank, Nedbank, etc. ABSA looks so incredibly cheap, but we know the risks involved there. Now, these banks haven't, if they're going to run, which I think they will, they haven't even started yet. Capitec, you saw the results that came out. They're fantastic, but they're 3 times the rating of the other banks. So, maybe you will get a better time in the next 2 or 3 years to go in and buy Capitec. But to buy it now, I don't think it is a wise thing. The share price does fall every now and again. Sort of middle of last year, I'm just having a look here, middle of last year, it was half the current price, more or less. Yeah. So you do get a chance. But the main banks, the big banks, may be a bit cautious on ABSA now. But the other 3 main banks, they are still cheap. There's still a lot of value that could potentially come out there.
David, what do you think? And also on Capitec, I was having a chat with a very interesting person today who was talking about how Capitec is really not actually a bank. They're more of a tech company, which is why maybe they're rated more highly than the banks. If you consider that, I think they're responsible for processing about 3/4 or thereabouts, maybe over 3/4 of value-added services, so things like airtime or electricity in South Africa. I mean, these are the things that we don't often think about when we talk about capital.
I think that's where the value is coming. And also, what's very interesting is that I think it's captured the imagination of foreign investors. When they look at South Africa and looking for a stock that represents South Africa or represents our country, I think Capitec stands out. And it's very difficult to explain the very high rating. But that rating doesn't seem to be succumbing. It's not giving up anything. It just continues. So there is momentum behind it. So it's a difficult decision to make, what to do, whether to go with the story or look at the other banks. The other banks are in good shape. I mean, superb shape, but Capitec just seems to be the ShopRite of the market, of the banking sector. Yeah.
Would you buy the other banks at this point? I mean, are they still enticing enough? Dividend yields, PE ratios?
Very attractive dividend yields and well run. So you haven't got the risk, especially as things start to improve now and as impairments start to lower on that, which I would imagine would happen as the economy starts to look better. So I think you're in good shape. And if trading picks up, activity picks up, they'll do well.
Yeah. A viewer says, Wayne often mentions option money. Could they include an option pick when it comes to maybe our stock picks? I don't know if we can do that ahead of our stock picks.
Look,
I guess that's your speculative pick, right?
Well, if you're going for a pure spec pick, you've got to choose one of the bombed out mining shares for a proper an option.
I think Wayne's talking symbolically. By symbolically, he means he's saying if you buy a cheap share, if it's bombed out, you're literally buying an option. It doesn't mean you're buying an option on the share. It's
not an actual option.
Not an actual option.
I'm not sure how the proverbial citizen in the street will actually buy an option. I don't know whether it's traded that if it's that available. I just don't know.
I don't know. I don't know if we've got any option market. I suppose there are over-the-counter options, but we haven't got a traded option market.
Not a traded market, no.
No.
Okay, so the option is, in other words, it's a binary. It could fail or...
David, I get it better now. David's question, when I say it's option money, what I mean is you're either going to make a fortune or go to zero.
Yeah, okay. Okay, I wonder, maybe you could think rapidly while I ask a question about another company. Besides some of the bombed up resources counters, if there's anything else in there that you would include in that basket. A quick question on ArcelorMittal. Load shedding over for now. Don't you think the worst is behind us? Is that an option?
That's an option, yeah. I think it's exactly that. It seems that the downside is very limited, because it can't go much lower than it is, but the upside seems to be immeasurable. There's no cap on the upside. So if you wanted to buy it, you're literally buying an option on a turnaround in the South African economy and demand for steel coming through, and that. That's exactly, I think, what Wayne would be alluding to.
Yeah, look, I mean, ArcelorMittal, their problem wasn't load shedding. It clearly didn't help, but that's not their problem. Their problem is that their players worldwide, 10 times their size, that can push the volume out and get the product out at a significantly lower cost than what ArcelorMittal can, because ArcelorMittal just hasn't got the volume in comparison to the big players.
And it doesn't have
even if they got the electricity, they can't compete, man.
And also, if you had massive South African growth, they would have had better odds, but we haven't had that either.
Yeah.
And we have much higher cost of electricity production from, what we did 20 years ago. Okay, very quickly, last minute, your stock picks. So Wayne, not an option. What's your safe and steady
Going
pick?
for Bank of America, I mean, I know the share price, it's a David Shapiro share chart there, but they came out with good results. And when you look at the absolute rating of the company, the price earnings ratio, and it was how expensive is the company. It's not massive. It's a 13 price earnings ratio or a 14. That's not bad for a bank like this going into a falling interest rate environment. So I'm going for Bank of America, even though the share price has run hot.
Okay. David, how about you?
I just saw ASML's results, and I just think they knocked 10% the results are superb, and next year is going to be great. And also, there's a lot of bluster around, putting pressure on these companies. But in the same breath, talking about what we spoke about earlier, I think looking for something outside of that, I like Home Depot. I think that, so I can change my mind. You can take half. But,
okay. Well, we have ASML up on the chart, and it does show today's precipitous decline.
I know, because Sonata came through to me and says, "What's your stock pick?" So I had to think very quickly on that. But thinking through this program, I like Home Depot. I think it makes a lot of sense to go in there as well at this kind of thing as rates come down and housing picks up.
Okay.
But take both of them, it's fine.
All right. We shall leave it there. David, Wayne, thanks very much for joining us this evening. David Shapiro is from Sasfin Securities. Wayne McCurrie is from FNB Wealth and Investments. And up next, we have The Close. Stay with us.